revenues, record revenues, $143 billion, 16% gain for year-on-year gain for the revenues. iPhone revenue, the bulk of that, $85 billion there, 23% gain. Look at the China revenue, 37% gain there, $25 billion. And services like Apple Pay and the rest, $30 billion, 14%. Your net income for the company, 15.85. But there's been some criticism about Apple. We're going to get into that, plus Meta and Microsoft, with Sam Jurrens, CEO of Evenheard. Sam, I have to thank you each time for waking up bright and early to talk to us. I think I should be saying Happy New Year to you. Thank you so much for being with us, Sam. Well, let's just jump into it. I wanted to get your reaction to Apple's Q1 results.
Yeah, it's impressive. It's good to see you again, too, Rodas, as well, and Happy New Year. Wouldn't miss this for the world. So
thank you so much.
No, but their earnings were, absolutely impressive, especially kind of given the current environment in tech and hardware, being that they're so consumer focused. To continue to produce that kind of revenue growth is absolutely phenomenal, especially some of their highlights, too, over in Asia, which they have struggled with lately. China specifically, they had some monstrous growth there as well. So it's impressive that they continue to post these kind of numbers. The size of the numbers keep just getting bigger and bigger.
Thanks, Sam. Now, there's still some criticism. I want you to weigh in on this, and I want you to take a listen to an investor out on the West Coast, Sam Gerber. He's Ross Gerber, excuse me. Ross Gerber is his name. He a big investor in Tesla, also in tech as well. But I want you to take a listen. He basically says Tim Cook has to go because Apple has fallen behind on the AI race versus its peers. So let's take a listen to what Ross Gerber had to say.
It's like they have this monopoly in hardware. They make the best hardware, let's be real. But it's like their software is just not great. Even the new iOS updates, they're more annoying. It's basically, they make the phone more annoying to use with every update, not less. And then it's like you start saying to yourself, like, these form factors are bad. Like, what has Tim Cook done? And then AI comes rolling around, and Apple Intelligence is literally Apple unintelligence. And they should have built out, and they should have been like a hyperscaler like Google and built their own. Like Elon's built like a bunch of these, AI server farms, like rapidly. Apple has zero. So now for the rest of their lives, they're going to have to use Google, which is now one of my top investments, over Apple, because Google's going to be the big winner from Apple. But one thing that they have to consider, the future is not on the phone. They have to consider that the future might be glasses that Meta's working on, and watches, or other devices, or no device at all, because AI gets so good. They can't just assume their hardware ecosystem monopoly will last forever, and they need a young, smart leader that can get the software up. Like, we need to go all in on software and make just an incredible AI operating system.
So, Sam, what's your reaction? Is it fair? Because Apple, you just talked about hardware. What's your take? What's your take on this debate about Tim Cook and where Apple is in the AI race?
Yeah, where you look at what Tim Cook did was great on, a lot of the efficiencies and supply chain side. I would definitely agree with Ross on somewhat of the future of computing, especially with AI in general. If you look at AI, to me, AI is what operating systems and how computers will operate in the future. And Apple just has zero flag in that game right now, which is shocking. And I would disagree with them on their hardware monopoly. They used to have a hardware monopoly. I would say a lot of the other OEMs with Android, their hardware on mobile and watches and those things is significantly better than Apple's now. The only place I see Apple with a stronghold is kind of in that Mac segment, which is not doing that great for the company as a whole. So it's pretty shocking. If Steve Jobs was here, I think it would be a totally different story in terms of, the outlook of the company. But I would agree, they do need some severe shakeup. They may end up looking like geniuses, and, quantum's 2 years away or something that no one expected, which renders a lot of the data centers useless in a way, if, true quantum. And so they would look like geniuses there. But outside of that, it is I'm an Apple fanboy for the last 20 years, and so it's really sad to me to see that. And it's really the world's their oyster. They have these devices that have all of the personal data of individuals. They prioritize privacy. Now they just need to figure out how to make that operate in the AI future world. There's no reason Siri shouldn't be a super intelligent executive assistant to every Apple user on the planet. And for some reason, they just can't figure that out. They're even having to turn to Google. So it's kind of shocking to watch. What you think are just rumors and not truth continue to prove to be true, that they are severely behind in the AI race.
All right, we'll see how things work there. I want to get your thoughts on Meta and Microsoft. I'll start with Meta first. Their earnings were, the market reacted very positively. I mean, we saw a 10% jump in the stock price for Meta, and they're planning to spend about $135 billion in CapEx for this year. It was about 75 or so last year. What do you make of the Meta's results, and I guess the reaction and their future plans for Meta?
At the current state of AI, without some kind of major innovation just around the corner, I think they have to do what they're doing. I think they're doing the right things. As a vast user of AI, to me, it's very clear how much demand is going to skyrocket. I think even Google is the one that said they're having to double compute every 6 months. And so I think the demand's only going to get greater without some material change in how this functions and operates. And so I think Meta's definitely doing some of the right stuff.
Now, Microsoft, on the other hand, I mean, it was an earnings beat, but they're also planning a big capex outlay. But their stock went in the opposite direction with a big drop. I think it was the biggest one-day drop since 2020. So, why do you think the market is punishing Microsoft versus Meta? Why do you think that is?
It's. Previously, you kind of looked at some of these tech companies as these giants that could never falter. But the speed of AI right now is moving so fast, they're even struggling to keep up. But I would say Microsoft in particular, theirs is really their exposure to OpenAI. OpenAI is kind of the black swan of AI at the moment, that if they falter, it's going to hurt the market. It won't change the future. The future will still be AI. I think that will just really shake investors' confidence. But right now, capital is still pouring in. Anthropic just had to they doubled their raise for their latest round as well. And I know OpenAI has other commitments from Amazon and previously SoftBank too. So the money's still there for now, but I think people are getting a little nervous of how much overlap Microsoft has with OpenAI now, which Microsoft kind of came out swinging with a big lead, and they're pretty far behind now. And so they're having to rotate partners as well. And so it's going to be a fascinating year ahead. The stuff that came out with coding in the end of last year was the most unbelievable stuff I've seen. And, I can't wait to see what gets built from it this year.
Exciting stuff. Sam, I want to take you away from tech for a moment. Just my final question is on fiscal policy. Apologies, but I wanted to get your take on the next Fed chair. Let's have a listen to President Trump. He was at the premiere of his First Lady Melania Trump's documentary. Funny enough, paid by Amazon and distributed by Amazon. So maybe there's a tech link there. But here he is telling reporters that he plans to make and this was yesterday, so he said tomorrow morning, which is today, Friday, just for our viewers. Here he is saying he's going to make his pick for the Fed chair today. Let's take a listen to the president.
Day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning. Oh. And do you know who you pick?
Tomorrow I do.
Wait,
Otherwise, I'll have to go to work very quickly. No, I'll be announcing the Fed chair tomorrow morning.
All right, so Sam, it's apparently it's down to Christopher Waller, who's a Fed governor, Kevin Hassett, who works in the Trump administration, Rick Reeder from BlackRock, and I think former Fed governor Kevin Warsh. And apparently Bloomberg is reporting that it's going to be Kevin Warsh. The prediction markets, I think, have jumped on him. But look, what's your? I don't know if you think who you're thinking is going to be picked. But either way, what's the monetary policy path for the U.S. going forward from here, based on whoever he picks?
I've been pretty concerned with just central banks' intervention in markets in general since the financial crisis, and it's only just exploded since then, especially during COVID. Japan being one of the central banks that's significantly further ahead in terms of the exposure to their own markets. I think they hold over half their own public debt, as well as the U.S. Fed has roughly a quarter of their debt. So the central bank has kind of taken over, and that's where Warsh is going to spook the markets a little bit, just because he's committed for winding down the balance sheet, which the markets have always kind of been punished during any of that process, and the Fed usually immediately pivots and says, "Just kidding, we'll keep expanding the balance sheet." And so there is, some severe concern in terms of just how the markets function today from it. But he is adamant about lower rates on the short term. But if he's trying to wind down the balance sheet, that's going to drive up long-term rates, which is, what we're already seeing in a lot of countries, especially Japan, like I mentioned as well. And so I think we could see, significantly higher long-term rates, even if there is shorter-term rates baked in there. It'll just be interesting to see if that is his announcement, which, yes, the markets are kind of anticipating that now, but we'll have to wait and see.
All right, we'll wait and see. Sam Jurrens, CFA, CEO of Even Heard. Always appreciate you waking up so early to talk to us. Thank you so much for your time, Sam. We'll catch up with you. Appreciate it.